Morning, Adam. How you doing?
Morning. Good.
New studio. Never done this one before.
Yeah, it's nice.
Yeah. Well, anyway, we've got a technical topic to get into, which is always good to do on the show because I get a lot of questions coming in from people who aren't technical like myself, who want an explanation of things. And over the last few weeks, I would say, I became aware of a push by Jeremy Rubin and some people who support him to push CTV into Bitcoin. And it seemed like a big change. There was a lot of drama. There's been a lot of discussion. It was the first I ever became aware of it, even though Udi have been telling me this has been worked on for years. And when I compare it to something like Taproot was something, even though I didn't understand it, I was fully aware of it for a long time, probably at least 2 years before it went live. I was aware there was broad consensus for it. So it opens up like a whole can of worms of things to talk about that I think there's going to be people who are not technical like myself who don't really always care about the technical details, but they care that the Bitcoin's being looked after in the right way and there aren't things being implemented that maybe bring risks to their investment. So loads to get into. We're going to start right at the basics. And I want to start with what is a BIP. I covered this before a couple of years ago now, but I think that's a good starting point. So do you want to explain what a BIP is?
A BIP stands for Bitcoin Improvement Proposal, and it's a kind of specification for a proposed change to Bitcoin, which may be a consensus change or maybe a kind of opt-in thing that some wallets can use and others choose not to. And so I guess BIP 1 is interesting as well. It was proposed by Amir Taki, who is, there's confusion between a Bitcoin developer of a particular wallet or Bitcoin developer or people looking at Bitcoin protocols in general. So I think BIPs are interesting to anybody technical working on Bitcoin, where they're working, whichever wallet they're working on. And some people are not even programmers, but they're interested in protocols and security.
Were there changes to Bitcoin prior to BIPs?
Probably. I'm supposing in the early days that Satoshi just fixed patches and rolled them out and told people on IRC, and they all upgraded. So I think there was less kind of caution, probably a lower security bar in the early days, and things became more cautious, more careful, more systematic as time went forward.
And then when did the BIPs come then?
I'm not sure of the date of BIP 1, but I think it's got to be pretty early, 2011, 2010, something like that, I would assume.
I'm trying to imagine how the process became established that there would be a BIP.
Right. Well, I think actually the Bitcoin upgrade process draws a lot from other internet protocols, and that evolved, in the, I guess, mid-80s, 90s. Something called the IETF, Internet Engineering Task Force, which manages a list of RFCs, which are BIP-like things describing, email protocols, web protocols, low-level internet transport protocols, all kinds of things that ensure interoperability at the internet level. And actually, not coincidentally, there was a big political debate about internet protocols, I think in the mid-80s, where there was starting to be big internet companies like Cisco and Microsoft who saw the internet protocols and thought they would like a vote, and that they thought their company's interests should be represented in how the protocols evolved. So it's kind of, see some parallels with that with the block size wars, 2015, right? So ultimately, and the people working on the protocol said, well, this isn't good. Internet protocols should be for the good of humans everywhere, users first. Companies, you're just service providers. It's interesting. We want to hear your technical experts, but we don't want you to override internet protocols in the interest of your companies, because your companies could come and go, and internet is for humanity, not for you.
Well, it reminds me of that whole net neutrality thing.
Yeah. So ultimately, the users won that one. And there's a famous quote from David Clark, which is something like, we don't believe in kings and presidents. We believe in rough consensus and running code. And so that was, a famous quote making the point that they were going to use a rough consensus process, which is a kind of decision-making process from business or organizations, religious organizations, political organizations that's hundreds of years old and predates the internet and everything. And so Bitcoin adopts that, but makes it a bit more decentralized.
Right. Okay. So BIP1, Amitaki.
Yeah, so it describes some of the process, creating a BIP, making a draft, that kind of thing. And usually you would want some example code so that it kind of proves that it works. So if there are one or two implementations, that's better than words, because words can sometimes be less precise than you thought they were.
Okay. But how many BIPs have we had now?
I don't know, probably 100 or something.
100. Okay, so someone's got an idea to improve Bitcoin. They develop a BIP or they propose a BIP. How do they distribute this? Because this is the thing that's totally unclear to me.
So there's not that much of a bar to getting a BIP. Like, the fact that something has a BIP doesn't mean that anybody's going to implement it or the the Bitcoin protocol will be upgraded using it. But if you propose something that passes some basic, it makes rough sense. Some people are discussing it. You can ask whoever is currently tasked with assigning numbers, can you have a BIP number? And then you then add it to a list on a website.
Right. Okay. So there is a central repository of the BIPs.
Yeah, I think it's in GitHub.
Right. Okay. So somebody makes a proposal for an idea for an upgrade. They request a BIP number, maybe have some sample code to explain it, and that goes then to who?
It's just available to anybody who is interested in Bitcoin's technical evolution. And depending on the type of BIP, some of them are kind of core network rules. And then people are interested in security and robustness. And, if it's an opcode, they're interested in...
What's an opcode? I hear about these all the time. I've never actually, in any interview, said, somebody explain an opcode to me.
So at the lowest level, Bitcoin has a kind of programming language. And a little bit like CPUs have operations at the basic level, which are very simple things that just add two numbers together and things like that. So Bitcoin has something like that at the lowest level. And over time, there have been new opcodes added to add new functionality, basically.
Right, okay. And so the BIP goes out there. A few people might take a look. A lot of people might take a look. You'll tend to get some feedback delivered in certain ways. And I guess if a BIP is, doesn't have much interest, then doesn't have much support, then that person either has to rework it or forget about it. Whereas if something shows a lot of interest, I guess this is the rough consensus thing, right? It's a bit messy.
Yeah, I mean, the IETF has some, texts and history about what rough consensus means in this process, and their model is a little bit more centralized. But generally, in some cases, there may be multiple ways to do something. And so one question is, which is the best way to do it? And then the idea is that, consensus generally means unanimity. Everybody agrees. But you've got to place some sanity bars around that, because some people object in a illogical way just to be disruptive. Not technical regular contributors, but if you just made a hard rule that, hey, if there's any objections, everything stops. Now, in a political version of consensus, that's basically what happens. That unless everybody agrees, things stay the same, and that's kind of what you want for Bitcoin in a way, right? Mm-hmm. You don't want people to make drama and be able to change it, because that's where we started from. The 2008 financial crash, the politicians being asked to make extraordinary changes to the money supply, and basically making the money unreliable.
Like Luna.
Yeah, recent news. So anyway, that's the kind of process.
Right. Okay. So I get it. And then if there's some interest in something, it gets developed, gets to the point where there's general rough consensus that it's wanted. The code gets developed, it gets tested, and then you go through a process of activation. So that's like the general process.
Right. There's some historic examples, because some people commenting are, looking at it ab initio without any of the history of how it has worked. and that it does work, and it works very well for what it's intended to do, which is to make it very hard to, push changes to Bitcoin that not everybody wants. And, they might look at that as an obstacle because they want this. So then they'll say, well, we should change the process. First question is, well, before you change a process, do you realize there is a process, that it works, and why it's designed, why Bitcoin uses this process? So that's thing. I mean, like some historic examples are P2SH, which probably people have heard about.
Mm-hmm.
It's a mechanism that's used for multisig. At the time it was introduced, I don't know, probably about 10 years ago, there were 3 versions. And there's an interesting cautionary history there, which is there was one called OpiVal, which some people were extremely keen on and pushed hard. And they were about to, launch it. And Russell O'Connor had a look at it, a developer who's still active in Bitcoin today. He had a look at it and found a horrendous flaw with it and said, wait a minute, you can't activate this. It will, create a denial of service amplification, and it's too dangerous. And so everybody recognized, like, wow, that's a terrible flaw. Let's abort that immediately at the last minute. And so then it switched over to P2SH, which was an alternative proposal. But there was actually another one called CHS, and I think there was a bit too much urgency, and so P2SH won over CHS, even though people were kind of on the fence or thinking maybe CHS was slightly better, but they didn't care enough. But in hindsight, given a few years and see how it evolved and what the limits were, turns out CHS would have been the better of the 3 proposals. Okay. They narrowly abyss. So there was kind of cautionary. So I think people learn from cautionary things. So now here we are, scroll forward to covenants. There are 4 or 5 different versions. Again, somebody's very enthusiastic about one and making a lot of noise, but there are other variants and they're probably better.
And I guess with certain upgrades, there's certain ways to do things, which can be a discussion point. There's certain changes that are easy binary decisions to make. So if it just makes Bitcoin more efficient, it's kind of either it makes it more efficient or it doesn't.
Taproot is a good example of that, right? So, I mean, the payload, both parts of Taproot make it more efficient, but more private potentially. The Schnorr signatures are just more compact signatures, and of course, there were discussions about specific encoding and how to make the multi-signatures. And so there was lots of discussion there, but there was no debate that Schnorr signatures were the building block.
But with something like covenants, it brings new functionality where it doesn't seem to be that everyone agrees what it actually means or fully understands maybe what they mean. And if that brings any risk to fungibility and blacklist, whitelist, you'll be able to correct whether that's right or wrong. But that's a more contentious issue, because if you can change what you can do with Bitcoin rather than just make it more efficient, then there deserves to be more of a debate about what the outcome for this is.
Yeah. I mean, it's true to say that Bitcoin's programming language is sort of compact, concise, and sort of security first, and sort of intentionally safe and cautious, right? And so the covenant idea expands what you can do. I think philosophically, Bitcoin likes small scripts, not, big complicated programs. So I suppose there's a potential that people could write more elaborate things, which probably beyond a certain point are not good uses of block space. It could be done in different ways.
All right, so we understand what BIPs are. Let's get into the specifics of this then. And it's no criticism of Jeremy. I talked to him, he's a great guy. But at the same time, we had, like I say, for me, it just came out of nowhere. And it might have been worked on for 2 years. Maybe I've missed some of the discussions. But for me, Taproot was out there in the open, being openly discussed by everybody I know for a good 2-3 years. I think I first spoke to Andrew Polster about it at MIT about 3 years ago. First, I became aware of CTV was a few weeks ago, and people were talking about activation. So that was an immediate red flag to me, because I was thinking, well, I'm pretty sure I should have heard about this. So I was nervous about that. Before we get into that, though, should we explain what covenants are? And why there's some contention around it?
Yeah. So a covenant is, I guess it's like a word borrowed from legal terminology. So if you've ever engaged in a property transaction, real estate, there'll be some clauses on your, on your house or your apartment that says, you've got to maintain this boundary wall with the neighbor or something like that. And it's a covenant because when you sell it, you've got to maintain that clause. You can't decide you don't like it and remove it. It's not within your authority to remove this rule. And so that applies to these scripts, that the idea is that you can create a transaction, you opt into it as a receiver that has a restriction on how you can spend it. And that's actually turns out to be useful for certain programmability. I think the most concretely useful example people give is a time lock vault. If you try to do cold storage, it's quite interesting. It would mean that you could store some Bitcoins in cold storage. When you want to take them out, you do a devaulting process. And then, let's say for a week, the transaction could be canceled and go back into the vault. And if it's not canceled within a week, then you can spend it, wherever you were trying to spend it. And that gives you some safety because, you could give the cancel button to your friends, extended family, colleagues, that kind of thing. And if they see a lot of coins moving and they can't reach you, they could get suspicious and cancel it. So it has that kind of, that's the basic idea for the vaults. And it's possible to build a version of that in today's Bitcoin scripts by deleting private keys, but it's a little, it's not the most elegant way to do it, but it would work. Nobody has actually implemented that. And of course, it's a flexible mechanism, so people could build other things with it. Potentially UTXO sharing, which is the kind of scaling idea. But I think people also lose track of the fact that a lot of the things that are possible with Bitcoin script are not implemented and made available in wallets in a usable form. So there's lots of innovation that could happen today using existing script. And so that kind of, ease of use, standardization of formats, understandable and easy to use availability in wallets is lagging often by years, right? So, even once we get Taproot, it'll be a while, as you see before, wallets support it. That was the same with SegWit. It's over 50% now, but it took some years. And I'm sure it would be the case for covenants too, right? Or time-like vaults.
Is there any validity to the argument against covenants that they affect Bitcoin's fungibility?
Well, there are two versions of covenants broadly, and one is recursive. So
is this what Andreas was talking about?
Yeah, I think so. So the original sort of covenants for Bitcoin proposal was by Greg Maxwell on the Bitcoin talk list, I think in 2013, something like SCIP, which is a technical term, a hilariously bad idea. And so he was thinking about the things that could go wrong. But I think since that time, people have started to think more about it, muse on the idea, mull it over, and think that, certainly restricted covenants are probably safe, and even recursive covenants are reasonably safe because you opt in and so forth. And, so there are at least three arguments about why that might be okay that have been developed since then. One is you have to opt in as the recipient. Now, that can be a slippery slope because, if somebody in authority like a bank says opt in or don't have business with us, how much choice do you really have, right? So that's one argument. Another one is that the fact that Bitcoin doesn't have covenant capability today, because it's a programming language, you can often build a huge permutation of things using the building blocks, right? So Russell O'Connor made the argument that it's almost an accident that Bitcoin doesn't have covenants today. It was because some of the opcodes were removed because they had bugs in the very early days. If CAT was there and a few other features had been implemented slightly different, we would have had them by side effect.
Right.
So it's, as the functionality of Bitcoin script gets more general over time, it's probably going to cross that boundary, possibly even by accident. And there might be a small possibility that it's possible today, even if somebody really put a lot of effort into finding some clever tricks to just about make it work. So that's to say, well, if it's almost possible, its general implication of programmability, maybe it's not such a clear, important line. And I think, the last thing is just that it's just programmability. So, you don't have to use it. It's opt-in. And that you can, the sort of KYC Bitcoin risk that people worry about, they're basically saying that what if, a set of banks agreed to a standard where there had to be KYC on a Bitcoin or you couldn't transfer it. Now, it turns out you can implement that with multi-sigs, and people have proposed that before.
Okay.
So from that point of view, again, you'd have to opt in. So it has largely the same characteristics. And those are generally called sort of informally online covenants, which is there's a multi-sig, one key is held by an authority and it imposes some policy. So they're kind of online covenant because that policy can be recursive if they choose.
And what about whitelists and blacklists? Is that possible? Is that a valid concern?
I think they mean basically the same thing.
Is it basically? Okay.
Yeah.
Okay. So you yourself, Adam, obviously I back you, don't mean no pun intended, but are you okay with the idea of covenants?
Yeah, I mean, I think so. Whether it starts with simple or goes straight to a more generic version is a topic being discussed at the moment, and there are technical people on either side of that. So one argument for starting simple is that, Bitcoin can gain some experience from that, and that can inform the generic. But the other point is that, Bitcoin doesn't have the rate of introduction of new opcodes is not very rapid. So if you're going to take the time and expense to review and get consensus on a covenant feature, you might as well do it properly once. That's the counter argument. I think a lot of technical people are more on that line of argument. Rusty Russell has proposed one, which is sort of extensible within itself, so it can start simple and have kind of feature extensions over time. So that's another kind of hybrid approach.
Okay, I'll come back to that. So the other thing I wanted to ask you about is that, and again, I don't understand the detail of this, but some of the arguments regarding CTV was that it would introduce the ability to shitcoin with Bitcoin. What was this about?
I did not pick that one up.
You didn't pick that one up?
No,
that came up quite a bit. It was starting to give more Ethereum type functionality with the scripting. Smart contract stuff.
Oh, I guess if you can make more complicated scripts, maybe some automated trading kind of functionality becomes possible.
Right. So would you say it's a fair way to explain this where we are is that covenants, there is a broad consensus that these might be okay. We should be careful. There is a proposal from Jeremy that's been fairly well developed that he feels is ready to go, that doesn't have strong consensus either amongst core devs, general devs, the community. There are competing proposals that those who aren't with Jeremy think need considering as well. And Jeremy's idea isn't dead, it's just not at that point where it's reached consensus. Is that a fair?
Yeah, I think that's approximately the situation.
His proposal isn't dead.
No, I mean, and the assuming that consensus is reached on something, it may be none of them. It may be a synthesis of the best ideas from all of them, for example, right?
Right.
So, I mean, there's a sort of experience and history to it. So, for example, many people have gone through this process where they proposed a BIP and it's informed something else. So Christian Decker, who's one of the Lightning authors, and actually the co-author of APO, which is another opcode that's in flight at the moment, sort of competing or ideally should come before Covenants because it's been in the queue for longer and helps Lightning. So before SegWit, Christian was working with Peter Will on normalized transaction ID. So it was a SegWit. It was an attempt to fix the problem that SegWit fixes, and it turned out SegWit was a better way to do it. So that BIP got left in history, right? And so, that's an experience you have, right? You work on something, it reaches its limits, and somebody finds a better way to do it. Now, the fact that you worked on it, it wasn't lost effort because the realization that there were limitations there informed the new design. Or maybe it borrowed some of the design ideas.
So why do you think we've got to this point where there is this kind of disagreement? Because there's certainly people who support what Jeremy's been doing, thinks it's fine, thinks it's ready to go. There's people who don't. And as I said to you, like, you've got it on your t-shirt, the don't trust, verify. It's a really great thing that people say and kind of as a kind of like a moniker for Bitcoin, but actually it's completely impossible for me to not trust some people. I cannot verify wallet code. I have to trust at some point that somebody else has done it. I cannot verify whether this is good for Bitcoin or not. I have to build trust, and I build trust around people. So I have a high level of trust in yourself, Peter Willey, Andrew Polstra, Matt Corallo, Greg Maxwell, and that's trust that's been built over time. I have less trust with Jeremy. That's not to say I don't trust him. I just haven't had that built. And the trust is built by a combination of how much time I've spent with somebody, how much trust they have built within the community. It's like career history, time in the community, etc. So I think people do have to rely on trust sometimes. And when Jeremy proposes an idea and I review it and say, okay, that's interesting, I don't know much about it, and I see, Adam Back is not supporting it, and I see maybe other people like Matt Corallo not even talking about it, that's a red flag for me. And I don't know if that's a good or a bad thing. I think that's just a reality.
Yeah, I think it's true for everybody because, my background is like applied crypto, so I know quite a bit about internals of Schnorr signatures and things. So in a way, the Schnorr signature part of Taproot came from IRC discussion in 2013, where I was saying Bitcoin should use Schnorr signatures, they're better. And, people listened over time, and eventually that got picked up. So, but at the same time, I wouldn't necessarily know, the serialization details of Taproot or, how it's been coded and stuff like that. So like yourself, I'm trusting that some very clever engineers have carefully built that, rigorously tested it, and peer-reviewed line by line each line coded it. And so you're sort of relying as well that there are many eyes carefully checking and a lot of mutual interest for it to be secure. So I think that's ultimately what people are relying on. Yeah, I think there's something about Bitcoin change process which is maybe a bit like aircraft design modifications, right?
Wow. Have you seen the Boeing documentary?
I haven't seen the documentary, but I read quite a bit about the Max issue, and I watch aircraft crash investigations. I find very interesting.
Yeah, I've watched, I think, nearly every episode of that because I used to be shit scared of flying, and watching air crash investigation actually made me more confident in flying. Strangely, because you see the A/B testing that a bunch of people have been through with flying, but the Boeing thing. So it was when I first interviewed Austin Hill. He said to me, Bitcoin development should be like nuclear. I think it was like nuclear reactor building. It should be considered the same, or no, it's space flight. It should be the same because one mistake on a space flight, everyone's dead. One mistake in Bitcoin, everyone loses their money. It has to be considered the same. The same rigor, the same testing, and so like that just reminds me of that. And when you say like airplanes, I was like, well, it all went wrong with Boeing.
Well, so the
rigor.
The one of the reasons I think that it's an interesting analogy, which is counterintuitive to many people, including technical people like Jeremy, who come from other backgrounds, is that aircraft, there's lots of engineering, but ultimately what makes them robust and safe is kind of biological evolution. So it wasn't that, the aircraft engineers came along and said, well, this would be the best design. And when it goes wrong, well, we'll just make a better design then. It's more that they make the best design they know how to make. It breaks apart for some reason they didn't expect. They do the investigation and find out that square-edged windows develop cracks. So now aircraft have round-edged windows. Nobody saw that coming, but now we know that. And so what told us that wasn't human ingenuity. It was physics and biology, right? And so there's a certain, suspension of ego that comes with that, which is these evolved systems are too complex for humans to design ab initio. We have to design by observing, engaging in peer review, taking the best of everybody's ideas, and learning from things that went wrong or nearly went wrong before. And so when you look at it from that perspective, there's something very wrong about one person saying, well, I want square windows. Can I have them now? Nobody found a bug in them, right? Like, no, well, you might be right. We don't know. But let's continue with the safety process, right? And, in the same way, when people when Boeing and Airbus make modifications to aircraft, they have to get them flight certified, which involves all kinds of rigorous testing, right? So Bitcoin is not as hierarchical, but it has an enormous amount of testing that goes into it. And so, the part of the activate it now is kind of bypassing that process, which is the danger.
Well, we've seen what happens the opposite side with Ethereum, which
Right.
openly said, let's move fast and break things. And they did break a lot of things, including people's money.
Yeah, I mean, that kind of platform has tended to lose about $1 billion a year to hacks and rug pulls and things. And that was last year, so you might have thought it was a one-off, but I think it lost 300 million within the first few months of this year. So it's on track.
It's on track.
Yeah.
Yeah, fuck that. I don't want that with my Bitcoin. Okay, so going back to the approach then Jeremy has taken, because they're, like I say, I've gone with the can't verify trust. That's my approach. I should get that as a t-shirt. And I've trusted people, and therefore, openly said I'm concerned about what's happening with this. Is there a different approach do you think Jeremy himself should have or could have taken?
Well, I mean, I think he would say he tried because it's also a fact in open source software in general, and that extends to Bitcoin as well, that, there are volunteers working on things.
Mm-hmm.
Either they're unpaid or they're paid a stipend to do independently what they think is good for Bitcoin. So nobody's telling them what to do. And generally it's more fun for people to build things rather than review other people's things.
Yeah.
And so it's just a fact that if you want to, if you think you have a good idea and you want to get it deployed, that depends on other people agreeing it's a good idea, and being more forceful won't make them agree. If anything, it will make them
do the
pull
opposite.
back.
Yeah.
Right. And so I think that's where it went wrong, basically. So if you look at Schnorr, the time when I was discussing Schnorr signatures in 2013 on IRC till when Taproot and Schnorr became live, that's a long time, right? It's 8 years or something.
8 years, yeah.
But there was no force. I was just describing ideas. I did almost nothing, in fact, apart from describing ideas, and other people gradually got more excited and spent a lot of time working out details, and finally you had it, right? So I think it's something else from the ITF. Now, of course, the ITF is a bit more hierarchical, but they have a chair for each protocol discussion group. And the chair's role is to find consensus, to see what the group of people discussing to declare when they've reached consensus. And it would be unthinkable for the chair to be the proposer of a protocol and then bless its own protocol and say, well, that one has consensus, we're going to activate it now. But if you look at what Jeremy's doing, not through any malice, I think, but just because he's enthusiastic and wants to generate action, he's kind of acting like, the proposer, the implementer, and the chair, and the person who's sort of trying to organize the meetings and get it activated. And it looks like, a kind of one-man show. And, I think what you just have to do, and I've discussed this with Jeremy last year as well, is you have to, work with other people. So find somebody else who's enthusiastic about it to co-propose it or co-author it or champion it, or, and then once you've got two people interested in it, maybe you'll find a third, and then that's a step closer to consensus.
It's like building political sport.
Kind of. I think it's, ultimately most of the people who are involved in the protocol development have got pretty good at separating ego from technical comparisons. So you'll see people having what sound like fierce arguments about details. And at the end of the conversation, they'll exclaim, oh, you're right. That's great. Now we can move on. So they've convinced themselves that they're wrong. That's fine, right? They just want to see the best outcome go forward. But you've got to engage in that conversation. And I think, it can be frustrating because of the imbalance of energy to build things versus review things.
Right. Okay. Yeah, it's and I guess for Jeremy, it sucks. Like he's probably worked on this really hard for 2 years, feels like it's ready to go, wants to get implemented, and then just hasn't been able to get that done.
Right, but I'd say it's kind of jumping the queue as well, right? Because I described Christian Decker's experience, right? He worked on the what is it, uniform transaction ID, and that didn't go anywhere. Like SegWit took over, but it was a better proposal, and he recognizes that, and he had a small part in it. So that's just open source development in general. It's like that, right?
Coming up against the Bitcoin Glacier.
Well, I mean,
which is for a good reason.
It's a competition of ideas, and it's not, it's a collaborative competition of ideas. So if you propose a kind of organized set of ideas as a proposal, some parts of them might end up being good and used, and some parts might not. And you just have to be, open to that. And I think also, the imposition of a time frame is risky as well, right? So Jeremy was saying, well, I need your comments by here, or I'm going to activate it. I mean, he's backed away from that now, but people really don't like that because
it's like a threat.
Well, I mean, it's it's like, well, it's like Boeing, like or the Space Shuttle Challenger, right? We're going to launch on this day. It became a political decision, and then it exploded, right?
Well, it's like S2X.
Yeah.
Yeah. Okay. So let's talk about that activation as well, because it seemed to then, not only did this idea come out of nowhere, it suddenly felt like, well, there's a way to brute force get this live by using speedy trial activation.
Right.
Something, again, that I was told was used for Taproot. I mean, I wouldn't know anything about this at the time. Taproot was getting activated great. The little orange squares were appearing, yada, yada. But now I am interested in this because I'm like, well, why was speedy trial used for Taproot? What was used previously? What is this?
Yeah. I mean, I think there's a lot of confusion about that. You see a lot of people, there's a CTV, Telegram, and I think IRC and so on. And there's clearly confusion about miners' part in activation. So they think that, well, you make a proposal and the miners vote on it and it happens or not. And that's the process. But that's really not the process. I mean, if we learn anything from the block size drama and the final SegWit activation via UASF, it's that miners have almost no influence on the outcome. 85% of miners said they were against the activation. It activated anyway, and they continued mining Bitcoin. So that's a lesson that everybody should learn. Now there are a lot of new people who don't know about the lesson, and so they just don't understand how it works. But basically, what activates Bitcoin is more economics, the important economic nodes like exchanges, wallets, and payment processors and individuals and investors running full nodes. If they agree and they upgrade, then the miners have to follow. And everybody has to follow, stay on the same network. Now, of course, you can get forks, and that's happened in the past where you get some kind of minority. But in particular, all the miners are doing is helping, signaling that they've upgraded and helping users who don't upgrade to be safe. And that's it. So, in particular, if you say with a speedy trial, well, let's turn the decision over to miners, what does that mean? I mean, miners use pools. There are very few pool operators. So it basically means delegating the judgment of a consensus decision for the ecosystem and the investors to, 20 odd guys who run pools.
So what is the point of miner signaling then?
It's to protect people who don't upgrade. So if you don't upgrade through a soft fork, you don't have a full understanding, and miners could steal from you, basically.
Okay.
And so if the miners, indicate that they've upgraded, now the cooperation of the majority honest miners will protect you if you don't upgrade. Right. And that's the point of it.
So where are we at now with CTV? Has it been paused? Is there other discussions?
Well, the activation discussion went away.
Yeah.
And I think there's a bit more awareness of things that came before, things that are in flight. So I think people realize that. Yeah, I mean, I think the way forward is more cooperative comparison to work between the different designs.
Right. So, I mean, is Jeremy talking to Rusty? Are they comparing ideas?
I'm not sure. I mean, I think Jeremy has kind of spun out and made new discussion channels which there are no developers in, or maybe application developers but no protocol developers, or almost no protocol developers. So that's kind of led to a little echo chamber.
So he needs to engage with protocol developers.
Well, he tried, but that he ran into the problem that everybody runs into, is a mutual problem, right? That there are fewer reviewers. So I think if more proposals get together and they discuss amongst themselves, I'm sure Jeremy will join in, and that will be a way forward.
Is there any amount of not intentional or not by malicious intent, but a certain amount of gatekeeping that perhaps exists around yourself, Peter Willey, Andrew Polstra, Gregory Maxwell, Matt Craig, like established people within the community who built that reputation, whereby if you can't get some kind of agreement from you guys that things are slower, and maybe that's a good thing, or maybe that's a bad thing, what happens after you guys?
Well, I mean, I think that, everybody's new once.
Yeah.
I popped up in 2013 promotional signatures, and now we have them. And I was certainly not forceful, right? And there are many new people involved in protocol design, implementation that were not here, 3 years ago, 5 years ago, 1 year ago. And, for example, Lightning, which is a pretty big thing, there were two versions of that proposed in parallel. One was duplex micropayment channels by Christian Decker. Another one was the Lightning proposal by Poon and Dreiger. And no offense to those guys, but nobody had heard of them before. And, it was a really ingenious idea, co-invented by two groups of people in parallel without knowledge, right? And so that shows that newcomers can propose startlingly good ideas and get immediate fast traction on them. So, for Lightning to work, it needed an opcode, but people saw that idea of Lightning had a lot of potential. So there was, enthusiasm to work out the details and get the opcodes done.
So there isn't.
So I don't think there is. I mean, I think the thing is that,
but there's maybe a certain hierarchy that exists.
I mean, there are people with skill sets that you want to somehow enthuse to pay attention, to review things. But, I think you still have to use some kind of common sense human interaction skills, right? So if you want somebody to review something, there's certain, look at how other people are doing things, copy other people, right? So, if you're not very good at sort of managing human interactions, find a co-author, find somebody else to help you champion it or navigate it. And I mean, I think ultimately, if you push too hard, it backfires. So I think that's a potential source of mistake as well.
And we've seen that again. It's like a historical lesson where people have tried to rush changes or push changes into Bitcoin that haven't had consensus, and so, it's kind of pushed some people away from Bitcoin. They've they've had the wrong time preference on upgrades.
Well, I mean, there have been some rage quits historically around the forks for sure, and at the time of the fork drama, you were paid attention at that time and talking about it afterwards. I think people sort of, I think investors found the fact that it was hard to forcibly change Bitcoin to be a very bullish signal. You hear Saylor talking about that, that was the single most important thing. Another interesting thing you get if you talk to investors, Saylor and people like his, sort of investor mindset, about what features they would like for Bitcoin. Their primary feature is just don't break it, right? So they're actually not very interested in, opt-in micropayments or fancy things, right? Because they're like, well, how risky is that? Right? The status quo is good enough. Don't break it.
Yeah,
so I think covenants, the pitch for the investor is vaults are good for high value long-term storage.
And obviously for Saylor, he's in a different scenario though, where he holds so much Bitcoin that something like the spendability is not as interesting to him, because his incentive model is based on the growth of hodlers, which, demand continues to increase means, his billions become more billions, etc. So and I would be cautious of. I completely agree with him. Just don't break it. But I would also be cautious to give too much weight to somebody whose incentive model's slightly different.
Well, yeah, you can see there are broadly two groups of. I mean, people use Bitcoin for many reasons. Some of them would be perfectly happy if it was a new gold ETF, even if it wasn't very bearer, just because of harder money. I think Safedine, maybe in that camp. I think Hal Finney was talking about, layer 2 banks. So they were thinking like a hard base money. But, for a lot of people, what makes it exciting is that it's permissionless bearer money with a low barrier to entry. Smartphone, install an app, you're ready to go with no permission. And so for that to practically work, you need scalability solutions, you need payment solutions that work for people in emerging markets who don't have that much money. And so I think both are important because ultimately for the investor, they're investing in the adoption rate of something. And for there to be adoption, there needs to be payment capability.
Well, my actual use for Bitcoin is it's pretty much the same as it was day one. I buy it and I transfer it to a wallet. And sometimes I transfer a bit of back out and I sell it. That's pretty much it. My only advancements have been transferring some into a Lightning wallet, which I've had on my phone, I've used when I've been away, and moving to a multi-sig cold storage solution. So even if Bitcoin ossified right now, for me, would still serve a great purpose for the rest of my life.
Yeah, I mean, I think that's true, that it's good enough in a way, but, with careful changes, I think it could be better and it can satisfy, different use cases. And of course, privacy is another one, fungibility, privacy.
Is there what's been done on, because I feel like we've covered CTV now. Where are we at with kind of privacy and fungibility? Any big changes being proposed? Anything you're interested in?
Well, I mean, I'm interested in privacy and fungibility. Is kind of where I came from pre-Bitcoin, was working on anonymous electronic cash protocols and things. And that's where confidential transactions came from. And so I, try to improve Bitcoin's privacy and realize that this is too complicated a change to expect to get into Bitcoin as a BIP in 2013. So changed focus to work on modularity so that you could have sidechains where you could do things like that. So that, maybe eventually that will reach a state of kind of safety and compactness and characteristics that it could actually get into Bitcoin. But there are incremental things happening for privacy. I think, the Taproot and Schnorr help a bit as well. And I think there are at times sort of network level things which are less consensus, more kind of network policy, privacy things. That unfortunately, there's not really any kind of major silver bullet technology that's reached maturity. I mean, certainly confidential transactions are interesting, candidate tech, the SNARK technology arc, and bulletproofs are interesting. And, the later versions of confidential transactions use bulletproofs, but those are still improving. And so it's probably some more years. So it's a sort of patience game, I guess, but there is a certain sort of safety and efficiency bar for things to go into Bitcoin.
Just move it slowly then. Should we talk about Luna before we finish up? Just because it's a bit of fun.
If you like.
Well, I mean, look, it's not fun that a lot of people have lost a lot of money. That's fucking terrible. And also, it's not fun to see Bitcoin being dragged about by shitcoin activity elsewhere. That's the most annoying thing for me. And where it becomes really annoying, Adam, is you have these big crashes in the markets. Suddenly it gets onto it was in Sky and BBC and the Daily Mail, and then your friends speak to you and they say, oh, I hear Bitcoin's crashing again. People want to ask you about the negative side of it. And you're like, yeah, but this was because of some stupid Ponzi algo stablecoin idea that had nothing to do with Bitcoin. It was just somebody was then using the money they printed to buy a bunch of Bitcoin, then they had to resell. Like, we're affected by these decisions. And you were chatting to me beforehand, about this perhaps affecting leverage traders in some ways unfairly.
Right. Well, I mean, people are investing in Bitcoin because they believe in it, because they look at the macroeconomic background, money printing, inflation, interest rates, and looking for a hedge. And, of course, if you just buy in cold store and the price drops a bit and then it halves and then it doubles across a period of a year, it doesn't make that much difference once you get accustomed to that volatility. But some people are more risk on, they've got leverage on. And so if somebody creates a bit of a flash crash drama through market misunderstanding, that can hurt them economically through no fault of their own. So you get this kind of contagion effect. And of course, if people are leveraged, they're either forced to manually deleverage to protect themselves, or the trading platforms will force deliver them. So that that amplifies the flash crash basically. And you see stats posted, so many 100 million liquidations. That's what it's about. So yeah, I mean, Luna basically was sort of like a fractional reserve bank, operated as a so-called decentralized thing, and their idea was basically the sort of shares in the bank, which were the Luna tokens, and there were some VC investors who put in the original money. It's a bit unclear whether it's somewhere between 1.5 and $3 billion. I'm not sure how much VC money got committed. I presume they got Luna tokens, a bit hazy on the details. Like yourself, I only really paid attention when people started getting enthusiastic about Luna Foundation buying $1 billion plus in Bitcoin. And then I was like, well, wait a minute. These guys are going to get themselves flash crashed and sell all the Bitcoin in one go, and that won't be helpful. And, that was in late March. So scroll forward about 6 weeks and it happened.
Yeah, I mean, I smelt a different rat in that it reminded me of Block One. This idea that you can create a token, print and sell a bunch of it, and then take that to buy a bunch of Bitcoin. One is I feel like you're openly telling people they're making a bad decision because you're taking their money and buying Bitcoin. That's what you're doing. You're saying, here, give me your money. I'll give you this token. I'm going to take that. I'm going to buy Bitcoin.
Right.
You're giving a market signal to that person. And that idea that because it came out of nowhere for me. I don't know how long Luna had been around, and so I don't pay attention to this shit. I've never actually used a stablecoin ever. Never used one. And I know I'm meant to use Liquid. So for me, I was just like, this just smells fishy. I don't like this. I hadn't even got into the mechanics of how it worked. But the 20% interest, I was like, when anyone's offering 20% interest, that smells fishy as well. There were just so many things that smelt fishy. And suddenly here we are. It's a complete market crash. But you'd spotted it early on.
Yeah, well, I said some of the same things earlier, which is, they were buying, people getting enthusiastic about how many Bitcoin they said they were buying. So I just asked on Twitter some pointy questions like, where is the money coming from that you're buying the Bitcoin with? Is it ICO money? Is the ICO money your collateral? If it is, the whole thing could flash crash because the value of your ICO can get stressed at the same time, and then the whole thing can collapse. Now, of course, they protested and said that, that some of it was real money. They'd actually got wire transfers from investors. But evidently, a lot of it wasn't real money, because their total supply of Luna at one point reached, I think, 17 billion or something. And so they had, I don't know, maybe 10 or 15% of that in real money. So, yeah.
Fractional reserve shitcoining.
I mean, about stablecoins, I think it also is quite unhelpful because, it's brought disrepute to, conservative types of stablecoins like Tether and Circle and Gemini, all of which have, one-to-one or more than one-to-one backing of actual US dollar short-term deposits, cash equivalents, and, very stated interest-bearing things. And so, they can redeem one-to-one all day long, basically, because, I think, for example, during the last few days, Tether redeemed 3 billion out of, I don't know what they're at, 80 some, in the space of a few days. So clearly they can redeem. But, UST versus USDT, it's only one letter difference. I think some people got confused.
Well, it does get confusing. There are so many of them. They get confusing. A lot of them appear on different chains. You don't know what each one stands for. And I don't think people after I was on Pomp's show and Pomp was asking me about it, and I was just like, it sounds a bit shady. And this guy dropped me an email. I said, oh, you don't really understand Luna and Terra. And he's like sent me some articles and I was like, this article was, if I don't know, 20 pages long if it was printed on A4. And it was all about the explanation, about how it works, how it maintains its peg, how the Luna token interacts with the stablecoin. But, this huge, I was like, I don't have time to understand all this shit. I don't have time. I just want to, again, it's a bit like trusting almost. Like if I was going to use a stable coin, I think I trust, like you say, Gemini, Tether, Circle. I trust those. I want to use it. A bunch of people have trusted this and have got completely and utterly wrecked because they have no idea what they're dealing with.
Yeah, I mean, some of the transparency went out the window too because, I think you could observe the Luna token versus the Terra US, the UST, because it was on-chain. And because it inflated the Luna supply by orders of magnitude, just created more and more of them to try and keep the thing afloat. But the Bitcoin reserves, they transferred them all, and that you could see that transfer to a professional market maker to try and defend. So, that's lost visibility, and they're not answering questions like, did they sell all of it? Did they sell some of it? Did they sell none of it? We don't know. And I think another kind of curious aspect of this, and really should cause some introspection for the VCs and professional investors who put up the $1.5 to $3 billion in the beginning, is their reputations and money help bootstrap this thing. They may, I presume, they get Luna tokens or some kind of discounted kind of tokens or stock in it, and because it's tokenized, one of the attractions for an investor is they can take the money out very quickly. And there was a period where this thing was going up in value very rapidly, right? Mm-hmm. So, some of the VCs may have actually made a large profit long before it imploded. And of course, taking a profit out actually leaves the thing higher leveraged and more fragile. So there's a question there of, whether professional investors are like moving away from funding innovation and products that provide value to users, and there's an exit and people make money when they succeed in making a popular product, versus renting reputation to Ponzi-like things, taking the money out in early and letting it collapse and then doing it again, because that is a risk for the end user. It diverts capital from productive uses to kind of casino behavior, and it risks the ire of regulators. Immediately regulators are talking about Terra, and apparently the SEC was already investigating Terra and Do Kwon, one of the founders. So,
he could end up in jail, right?
I presume so. He's in Singapore, but Singapore is a regulated financial center in its own right.
Yeah. It is frustrating because every one of these rug pulls ends up bringing Bitcoin into the same ecosystem of bullshit. And we end up having to not only defend, like I said earlier, defend it to my friends who are like, what's happened to Bitcoin? And you have to defend it to regulators. And it's just bloody frustrating that people don't do a better job with this, especially with all these crypto VCs raising 1, 3, 5 billion to invest in Web3, and I feel like we're going to see this over and over again. I also feel like over the next week or two we're going to hear about some funds who have maybe blown up or.
Yeah, somebody has got to have been hurt, and the other thing is the explosion was considered to be a speculative attack. Like that was a funded, coordinated thing by somebody with a lot of market intelligence, trading capability, and money to play with, and some leverage. So it's kind of like the George Soros attack against the British pound peg in the pre-Euro days. If you have money and you see something that's illogical and people are suspending logic and pumping up the value of something, you can short it and burst the bubble. And I think some people feel that was a bad act, but actually
No,
it's good because it flushes out silly stuff so that what's left makes sense. So if there are, and the fact that they succeeded at that will give them funding and embolden other people with that skill set to work their way down the list and do that to anything else that doesn't make sense. And so ultimately you end up with the survivors being less stupid ideas, more robust things. But I'm not sure that the mechanism is there really to discourage VCs and big investors from lending reputation and putting discounted early money into these things, because some of them probably got their money out and made a profit on it.
Yeah, almost certainly. I don't think it changes that. Hopefully what it changes is the mindset of those who are potentially investing, but yeah, perhaps not. I mean, we've seen a bunch of new Bitcoin maxis minted this week, people declaring they're done, and that's great. But we've also seen I don't know if you've been on the Reddit, but all the terrible comments of people saying they've lost everything.
No, I mean, it is bad. I saw somebody commenting that, one particularly bad thing about it is that because it's advertised as a stablecoin, as a dollar equivalent plus an interest rate, that's actually marketing itself to conservative investors who are saying, I don't want the price volatility. I just want an interest rate. Of course, as you said, it was naive to think that there's a risk-free 20% interest. That doesn't exist when the free market interest rate, risk-free interest rate is super low at the moment. So that's a red flag. But, a lot of people are not professional investors. They wouldn't spot that. So if they're looking for stability, they got the exact opposite.
Yeah. And also Alex Gladstein talks about how important stablecoins are for the developing world. We've had a long conversation about that. And it's one of the reasons I've come a little bit less harsh on other protocols, as much as I don't want to, I don't own any Ethereum, I wouldn't use it, or Tron. At the same time, I know there's people like Palestine who are, parts of Africa who are using stablecoins on these protocols, and they're using it for survival. I mean, that's the money they trade. It's the way they protect their wealth. Bitcoin's too risky for them. But if these people got, are they sophisticated enough to understand the difference between a Tether or a UST or a USD? All these coins tend to sit near each other. So
yeah, I mean, I think the network that's used to transport the stablecoin is the centralized ones like Circle and Tether and Gemini. Doesn't really matter because ultimately it's a claim on a central party and it's reserved, and the reserves it's set aside for that client funds, right? So, and you can, for example, with Tether, you can use that on a Bitcoin layer 2 on sidechains, and there are proposals to do similar things for Lightning, a couple of competing proposals for that. I mean, of course, I think, US dollars fall rapidly in value at the moment with the amount of money printing. So it's not really it's short-term stable, but it's just predictably going down, right? So now Bitcoin has the opposite effect, which is it's a bit unstable, but it's tended to go up. And so has a positive price trend over the longer term. So, yeah, I mean, I think a lot of probably the biggest amount of volume in stablecoins, bearing in mind Tether, there are competing ones by market cap, but by transferred volume, Tether is like 10x ahead of the rest, right?
Yeah.
And that is because it's embedded in most exchanges as the de facto way to move dollars. And so it's mostly used for trading, people to move money between one exchange and another, as collateral for some of the derivative products, and as Bitcoin secured lending, like on HODL. You're going to borrow in a stable coin, basically, and then you can convert that into a bank account or something. So I think, the other annoying thing is that the media doesn't get it often and sort of amplifies confusion. So they said, they tried to say that Tether had broken the peg, but it's absolutely not the case. It was being redeemed 1-to-1 the entire period. But the point is that banks suck, and so if you have a short time preference, like you need some dollars in your bank now to cover like a share loan, or you need tethers to trade now, you'll pay a premium to get it fast. And the only reason you're paying that premium is because banks suck. And so if the market is being dramatic, the premium could be high or low, but this happens all the time. And it's fine because, if you're not in a hurry, just wait. And if you are in a hurry, you're probably in a hurry for a reason, which is you see something that's a cheap price and you want to buy it and you need to, convert to Tether or to dollar to get it. So you'll pay the premium. And there will be other people incentivized by that premium to say, well, I'm not in a hurry. I have some Tethers. You can have them and I'll go convert them for, pick up the few percent difference, like next week.
It's wild how often we have to deal with this shit.
Yeah.
I'm feeling like the NFTs are starting to crash as well now, and I think a few other projects will collapse, and I wonder if we're going to just do exactly the same in 4 years' time, 3 years' time now.
Well, yeah. I mean, I noticed there's various dominance indexes, but the Bitfinex one, which is BTC Dom Perp, was up 20% in the last 2 days.
Wow.
So that's sort of like, when you get a global financial drama, the dollar tends to get stronger. Flight to safety.
Mm-hmm.
It might have its own problems, but people know it. And so it's kind of perceived flight to safety. And you see that in Bitcoin, flight out of the long tail of altcoins to Bitcoin.
Well, let's have it. How's everything at Blockstream?
Going good. Yeah. Lots of mining infrastructure builds and the solar Tesla block project.
Fuck, forgot about that. Tell me about that. That's fascinating.
So, we did a jointly funded project with Block and engaged Tesla to build the solar infrastructure and provide the Megapack batteries. So it's off-grid. And the idea behind it is, our thesis is that the economics of Bitcoin mining can help fund green power infrastructure built, like to increase green power infrastructure.
Yep.
And the reason is that most power is actually overbuilt and underused because it has to deal with peaks in demand.
Peak load.
And so, if you were to build some power infrastructure and somebody would come up and say, well, I will pay, X cents per kilowatt hour, 24/7, anything you got spare, I'll take it. That makes your economics much better. And so, you've got 100% duty cycle on the supply. So that should make it more profitable and easier to finance. And so that's what we're doing, starting with this project, and then we're interested to grow it, 100-fold.
Wow, Tesla were totally into it.
They're supplying the Megapacks,
right,
and
okay.
they actually do the solar install as well, but they're not an investor in it.
Okay, and where are you building it out?
This is in Texas, so we have a grid-connected site, and we didn't grid connect this part of it, but it's on the same site, and that site is primarily a wind farm. So if you look in the background, there's loads of big wind towers.
And is this a test, or are you guys pretty happy with the economics of it?
I mean, we're happy with the economics of it, but what we intend to do is to make it transparent. So that, publish the financial model, profitability, real-time mining metrics. Partly because there's a lot of confusion, and people are writing reports, and nobody quite believes a report because one person's report says the opposite to another person's report. But if we say, well, let's just build it and show you, and you can look at it for yourself, and then there's no debate. The numbers can speak for themselves. So that's what we're doing.
Amazing. Well, listen, always good to talk to you.
Likewise.
I'm not sure when we'll speak next. We'll see you next, probably some event, but appreciate you going through all that technical stuff for me. And good luck, Adam. And guess I'll see you sometime later in the year. Or speak to you next week, actually, won't I?
All right.